Hello, everybody, and welcome to another episode of Scotch and Stocks. In this episode, we're going to be discussing on how your financials should be looking in order for you to be able to make solid investments into the future with a solid foundation for you to stand on and build upon. Welcome to Scotch and Stocks. First things first, we're going to be talking about the one of the most important things that not many people have, I believe, or many people don't consider that they need is a emergency fund. Now, that emergency fund can actually be extremely helpful when there's an emergency. Why do you need it? Well, you need an emergency fund because you don't want to be borrowing cash. It's from somebody else that's going to charge you an interest whenever something happens. So it's almost like having a little insurance on the side. The size of that emergency fund should be anywhere from 3 to 6 months of expenses. But at the beginning, if let's say you're broke, just like me, you should be looking at having maybe $1,000. That will allow you to, be safe. Anything happens, something goes wrong with your car, something goes wrong at your house. There's stuff that you can fix, and you won't be living paycheck to paycheck because you'll have that little buffer. Obviously, you want to increase that little buffer into at 3 to 6 months, hopefully somewhere in the middle, depending on who depends on you and who doesn't. But if you have no dependents, having 3 months of expenses could be a good buffer. Now, when you have that in savings, what you want to focus on next is start building your little nest egg or your little investment budget. Now, this budget, the reason you need that emergency fund in the first place is because that emergency fund will allow you to use those funds in case that you need them, but it won't touch on your investments in the future. So anything higher than 6 months of expenses, you can start looking to invest. When you start investing that money, that's money that you're not going to touch, because an investment can go down in value, but if time is in your favor, those investments can come up. If they do come up or they do come down and you need that cash and you don't have that emergency fund right there, that's going to be a problem, because you're going to need to sell your investments at a loss in order for you to pay for those additional costs that an emergency brings. So if that happens, that could be a problem, right? So what I would suggest to focus on is, after building that emergency fund, now you can start investing. And the question is what do you want to invest? Now, the thing is, there are many different things that you can invest, right? You can invest in stocks, you can invest in real estate, you can invest Pokemon cards, right? Like if you find something that can make you more money, that becomes an asset. Something that takes money away from you is a liability. Now, an asset could be anything. An asset could be, for example, you buy a car today that you maybe found at a really good price. You don't drive it, and then maybe a month later you sell it, and it makes you money. That little bit of money that it made you, it's actually an asset because it made money for you. Now, a liability is something like, let's stick with the car. A liability is something that takes away. If you own a car, but you need it for transportation, right? You're going to need gas money, you're going to need insurance, you're going to need all these different things that are going to cost you. Any sort of expense that you have that takes away because you own it, it's a liability. Now, we want to focus on assets. When you have that investment money should go into assets, things that are giving you money, or at least giving you a utility that surpasses the cost that they're giving you. For example, if you buy a property, now that property, you don't have to pay rent anymore, right? Like, assuming that you buy it and cash outright. I know many of us are not going to go that route, but that gives you a utility straight away, right? Or you have to pay less. You can put some money aside to do other things, and that's what an asset does, right? An asset is, you put that money away, makes you some money. Now you have more money. You buy another asset, buy something else, and then you can start looking at what different strategies are there in the investment world. Some of the things that I'm invested in particularly are cryptocurrencies. Are extremely risky, but very, very profitable if you get in at the right times. We're talking about stocks. Now, stocks, when you buy a stock, you're buying a company. And companies can be very profitable if you buy them at the right time. Or they can be, they can take some time in order for them to develop. You can buy ETFs, which is what I recommend for mostly everybody. ETFs can be extremely beneficial because it's almost like putting money in the market and leaving it there to grow. Right? You're putting a little bit of money into a lot of different companies. Now, leave a comment below if you which sort of asset you want me to talk about. Hopefully, I'm going to be making videos in the future on which assets to go in with. But at the end of the day, depends what you guys want to watch, because it's like I'm just sharing the knowledge that I have and the time that I have with you guys. So leave a comment below. By the way, this video is sponsored by Scotch and Stocks. Scotch and Stocks is a show that me and my father do, We open up a bottle of whiskey and we talk about the market, we talk about investing, we talk about everything related to money. Video is going to be coming in. Hopefully we want to do it once a week, but so far it hasn't worked like that. So I would say once a month for now. Right? Once a month we're going to be coming and we're going to be talking about the markets, how we perform in the month, who's winning what, because that's one thing that I want to include in the videos is like who's winning and making the most money in the markets. So far it's me. Now that you're sort of maybe a little bit more educated in how to get started in investing, is make your trading account. Be ready, right? Because the thing is like everybody talks about investing. It's like, oh, if I could have bought Amazon last year. Well, you didn't. Accept that, right? Like you didn't buy Amazon, you didn't buy Apple back in the day, right? Focus on now. What can you do now, right? So, well, open up an account, right? Have it ready. Start putting in small amounts of money. Start building that nest egg, right? Like one of the things that I like to do, for example, is out of my salary, I grab a percentage of that money that I received of my income, and I put it away, right? It's money that I can't spend. It's money that's going directly away from me, and that money is going to go into my investment account. So that money, that it's almost like you're paying yourself. Whenever you pay everybody else. You pay the electric company, you pay the car company, you pay the bank, you pay everybody, but you don't pay yourself. Why don't you pay yourselves? Well, pay yourselves and buy yourself some things that are going to make you money in the future. In this case, are some investments, right? So put that money aside and slowly start getting that. Start strengthening your investment muscle, because that investment muscle is what's going to get you from not investing anything in the markets or not putting anything for your retirement into starting to understand that it's like, okay, a little bit of this money is going to go away. I can't touch it. It's going to be directly for things that are going to make me money. Now, if you can do that, it will make it a lot easier whenever you start making more and more and more money. Because at the beginning, this is not like you're putting money aside not to become a millionaire instantaneous, because that's not going to happen, right? If you're looking for that, you're in the wrong channel. But if you're looking for slow and steady income increases, right? So when you start making more money, that percentage becomes more and more and more money and more money and more money that you're putting away towards things that are going to make you money. That's what I preach, just because it's what seems to be working for everybody. At least it's what's working for me. You're going to see those numbers go up, go down. Sometimes you're going to lose money, sometimes you're going to make money. But if you leave them there and you start getting used to the idea of putting money away, in the long run, that money should grow. By the way, I have some links down below that you can follow and hopefully sign up with them so you can start your journey. And yeah, try to do a little bit of research on your side and see, okay, what are the things that I want to invest? Leave your comments. If you have any questions, I'll try to reply to every single comment, right? Because right now, there's not a lot of you watching, but I'll answer all of the comments that I see. And any questions you have about investing or what you want to see next or anything, don't forget to hit that like button. If you made it this far into the video, why not, right? Like, it's free, All right. Thanks so much for watching. And remember, sometimes you gotta be ready. All right.